A month from now, we'll find out if Canada's economy livened up at all over the summer. Today, there was a hint that it might have if the U.S. economy reflected any of its heat. Our biggest trading partner posted blistering growth, even though inflation was stubborn and interest rates were at 22-year highs. So Jeannie Lee joins us now with this story. So we're at some of the really fun special events that took place this summer that were part of it?
Right, not inflation like you were guessing last hour, yes. We're talking about Taylor Swift, of course. The first leg of her Eras tour definitely brought in a lot of money, not only to her personally, but of course the hotel rooms, the merchandise, etc. So a lot of money brought in by the Taylor Swift effect. And also Beyoncé's Renaissance tour was another hot ticket last summer. And of course, Barbieheimer, or some people call it Barbenheimer, the double bill at the box office, which was blockbuster. So those fun events were supposed to altogether create a noticeable jolt to the economy, and it probably did, given the amount of money we're talking about, at least a little bit of a percentage point increase onto the growth rate of the U.S. And here is the grand total. 4.9% was the annualized rate of growth for the U.S. in the summer quarter, which is, just blows all predictions out of the water. And so you had that. You had the fact that consumers were splurging on everything from Swift to SUVs and meals out, all kinds of entertainment, travel, continuing to splurge in the U.S. And housing investment actually grew, even though interest rates were at 22-year lows. This was another one of those gravity-defying, logic-defying events that happened. The other thing is there was strong defense growth and other federal spending that went up a lot in the summer, all adding to this impressive growth rate. And the other thing that came out today was that durable goods orders in the U.S. really were strong and continue to be. And that, of course, would indicate confidence in the economy. You don't buy a car unless you're reasonably confident that you can pay for it over the next 7 or 8 years, or however long people take out car loans these days. But that's good for the Canadian exporters that tend to benefit whenever there's a strong burst of growth in the U.S., because the U.S. is our biggest trading partner, after all.
So can the U.S. party go on, and are we going to really feel the impact here? And do you think it didn't feel like Canadians were partying it up like that? The people were really kind of watching their money.
Well, you're right, because we follow the laws of gravity and logic in this country. And you remember correctly that the last 2 quarters, or should we say the first 2 quarters of this year, were really showing barely any growth. And so a little bit of help would be nice, if the U.S. does contribute to that. But consider all of the things that really speak against that. You have pandemic spending, savings rather, depleted now, or at least dwindling. New saving is falling, so there's only so much spending, more spending American consumers can do. You have business investments that's already falling with interest rates higher for longer. That message is getting through. 8% mortgage rates in the U.S., getting very close to that. Here in Canada as well, very high mortgage rates. You have high government debt. You have a possible shutdown in Washington. You have the wars going on. Can the U.S. continue to defy gravity? Most people don't think so, in terms of economists surveyed today anyway, that maybe the summer was the last hurrah